morning. This is Business Morning on Channels Television. I'm Chimezi Obi Iwago. Well, let's begin with stories making the rounds on the world of business. The federal government says that power distribution companies still have the responsibility of providing meters to customers as opposed to the recent position of the DISCOs. The government maintains that the meter asset provider regulation, which was unveiled by the Nigerian Electricity Regulatory Commission in March this year, did not completely remove the responsibility of providing meters by the DISCOs. This latest announcement by the Minister of Power, Works and Housing, Babatunde Fashola, however, contradicts the position of the DISCOs, whose spokesperson, Sunday Oduton, recently said that metering is now the responsibility of NERC. NERC had announced on March 12 that power distributors would no longer have the sole responsibility of providing meters to electricity consumers. It explained that its MAP regulation had introduced another class of operators in the power sector called meter asset providers, adding that MAPs would henceforth take up the duty of providing meters to customers, among other functions. Now, the Fiscal Responsibility Commission has recommended the expansion of the list of ministries, departments and agencies that are scheduled to pay operating surplus to the Consolidated Revenue Fund of the federal government. The Fiscal Responsibility Act 2007 requires listed agencies to pay 80% of their operating surpluses into the Consolidated Revenue Fund while retaining 20%. The operating surplus is made up of revenues accruing to government agencies above what they are approved to spend at the beginning of the budget year. 30 agencies were originally listed in the Act. However, the addition of 92 agencies by the Ministry of Finance in an effort to shore up the revenues accruing to the government brought the number of organizations required to pay operating surpluses to 122. Now, among the 92 new agencies added to the list are the Nigeria Drug Law Enforcement Agency, the Nigerian Investment Promotion Council, the Nigerian Railway Corporation, the Small and Medium Enterprises Development Agency of Nigeria, and the Federal Radio Corporation of Nigeria. Justifying the need to expand the list, the acting chairman of FRC, Mr. Victor Murako, said there was no agency of government that did not earn one form of revenue or the other. And the Nigerian economy is said to have attracted a total investment inflow of $27.9 billion between July 2015 and March this year. Our data from the National Bureau of Statistics shows that the investment came in from three main sources. They are foreign direct investments made up of equity and other capital, portfolio investment comprising equity, bond and money market instruments, and other investments which are made up of trade credit loans, currency deposits and other claims. The report also showed that in 2016, the value of investment inflow remained depressed, decreasing by $4.55 billion from $9.65 billion in 2015 to $5.1 billion. It, however, noted that the recovery began in 2017 as investors raised their stake by $7.1 billion to $12.2 billion. The data shows that as of the end of the first quarter this year, the country attracted about $6.3 billion investment inflows. And to some market news now, Seplat Petroleum Development Company PLC, a leading Nigerian indigenous oil and gas company listed on both the Nigerian Stock Exchange and the London Stock Exchange, has signed a shareholder agreement and share subscription agreement with the Nigerian Gas Processing and Transportation Company, otherwise known as NGPTC, a wholly owned subsidiary of Nigerian National Petroleum Corporation. NGPTC will subscribe for 50% of the shares in Ano Gas Processing Company Limited, a company that was incorporated in 2017 for the purpose of processing future wet gas production from the upstream unitized gas fields at OML 53 and OML 21, which is operated by Shell. The signed shareholder agreement will govern Seplat's and NGPTC's respective interests in the AGPC Incorporated joint venture. Other commercial agreements with NNPC and the Nigerian Gas Marketing Company were also executed during the signing ceremony held at NNPC headquarters in Abuja on Monday. And Skyebank has informed the Nigerian Stock Exchange that its shareholders that the bank is yet to file its unaudited financial statements for the period ended June 30, 2018. Now, the bank says its unaudited financial statements for the period ended June 30, 2018 were approved by the board at its meeting of August 9, 2018 and have been presented to the Central Bank of Nigeria as the bank's primary regulator for approval. According to Skyebank, as with the bank's audited financial statements for previous financial years, the unaudited financial statements for the period ended June 30, 2018 shall be published as soon as the CBN grants its approval. The bank says it remains committed to transparency, full disclosure, and compliance with regulatory requirements. And for Monday's market review, our Temple Ashaju has the details now from the Stock Exchange. Good morning, Temple. How are we doing today?
Very good. Good morning, Chimeze. Good to know that we're here, right, live at the Nigerian Stock Exchange. But you also need to know that Bosin Omofaye is right here to bring you up to speed with some developments on the commodities market.
All right, so how did the market perform?
It's good to be on the show here with Temple and with you there at the headquarters.
Can you take us through yesterday's market review?
So let's begin with the unlisted securities market, talking about the NASD O2C, where that market experienced a revamp and a bullish sentiment yesterday, revamp from the bearish sentiment it had ended the market with last week. It came up 2.31% yesterday. The market capitalization also surged to 476.08 billion naira. Now, what is happening there is the huge investment of 8% that we had seen at Friesland Wamco Campina, one of the tradable companies on the platform. And we see that the volume of trades was just 178,223, and that is largely as a result of this investment in Wamco, and the total value of what we had yesterday rose 21%. But basically, Ensure Insurance, Union Bank of Nigeria Properties, as well as CSCS PLC, which is tradable, the Nigerian depository market, which is tradable on that platform, were also some of the volume shockers that we had at the NASD O2C. Now that takes us to the equities market, where the all-share index was negative by 13 basis points, 0.13% yesterday, and the sell pressure continued and then brought down the equity capitalization to 12.923 trillion naira in terms of equity capitalization for yesterday, Monday. Month-on-month basis, we know the market is down 4.37%, while the year-to-date performance is currently at a negative of 7.44%. In terms of the performance from the last bullish sentiments we saw on January 19th of 2018, the market has lost 21%, basically. And that's as a result of the political tensions that we're seeing left, right, and center in the country. And of course, the trade wars happening in the global stage between the United States of America and Turkey, actually. Let's look at the sectors now, where Zenith Bank impacted on the banking sector by 0.77%. That sector closed lower. Zenith Bank was down 0.64% as a result of some sell pressure by investors who are taking profit on that stock. Looking at the insurance side of things, that sector came down 0.49%, following the losses on ICO insurance by 2.82%. Oil and gas sector was heavily impacted, or fairly impacted, I beg your pardon, by O&O. That was down 5.41%. But when you look at the performance that we're seeing in Etana PLC, which also falls under that sector, Etana has been able to buoy heavy losses in that sector. That's why we have the oil and gas sector closing lower at 0.29%. For the consumer goods sector, it was relatively flat, 0.01%, and the industrial goods sector was unchanged. When you look at the volume activities, 160.43 million units of shares were traded yesterday at a value of 2.21 billion naira. And just the deals that you have are just 3,120. In terms of gainers, Etana PLC was the highest gainer, while the top loser was a mutual benefit. And this should now take us down to the Nigeria energy markets, where you have the major companies that are found under the oil and gas sector. This is critical for investors in Nigeria as the oil and gas market continues to gain traction and oil price continue to remain steady in the global stage. We'll start with corn oil. That was unchanged to 24 naira 30 kobo, but we had a volume of 37,820 shares exchanged by investors on that particular stock. For the major gainer, you've got Etana Oil. Etana Oil in the last 8 sessions has risen by 20%. And of course, is doing well as a result of some good sentiments by investors on the sector. It has even outperformed the oil and gas sector, which has lost some 7%. But when you look at that, by year to date, it has gained almost 9%. That is Etana Oil, and that is why we had 9.92% gain yesterday. Other companies in the oil and gas sector that are doing well right now, we have 11 PLC, was up yesterday by 2.27%. Of course, that too had its half-year audited results released to the market recently. So why you have this informed why you have some good reaction to that. Forte Oil is down 0.22%, giving an opportunity for investors to buy into it. Let's go to Japol. Japol came lower yesterday by 6.90% to 27 copper. This was a company that actually performed excellently well last week. But right now we have it at 27 copper. For most of the other companies in that sector, they remain unchanged. Seplat, for example, despite the MOU that was signed with some investors recently on the OMLs that we've seen in the news and the media, nothing seems to have changed yesterday. Yesterday, we only had a volume of 5,617 investment on that stock. But we're hoping that today will basically give a rise to some kind of performance on that stock. Let's move now to the fixed income market and begin with the Treasury bills market. Treasury bills yesterday, we saw low appetite basically in the secondary market T-bills two-way quote. And that is not far-fetched because we know investors, offshore investors, are taking their exits. The February 2020 for the bonds, just like we have in T-bills markets, is really, really on the downside. And that's why you have the yields on that on securities in the T-bills market really, really on the rise at the moment. We look at September 2018 security in terms of T-bills. Yesterday was settling at 11.15%. You have the August 2018 paper also remaining at 11.55% with just 59 deals. Generally, in terms of Treasury bills, we have 388 deals. The total value of 112.62 billion naira on the Treasury bills side of things in the secondary market. Before we move on, let's move on with the bonds market now, where the February 2020 and the March 2027 papers continue to suffer losses. Average bond yields advanced 0.22 basis points to 14.28%, and yields on 13 instruments actually advanced, while the February 2020 paper saw this decline that we've been or talking about. Generally, at the FMDQ O2C, it was just 81 deals and 8.8 billion naira that we had exchanged yesterday.
All right, thank you very much, Temple, for those updates. Now, we'll take a quick break, and when we come back, we'll bring you our commodities market update, also coming to you from the NSC studio. Just stay with us.